If you're looking for fresh opportunities beyond the typical big names like Nvidia, Palantir, or Robinhood, you're in the right place. Today, I'm rolling out my top 3 watchlist additions that could boost your portfolio in the upcoming months. So, whether you're hunting for growth, fintech disruption, or a bold play in the crypto space, there's something here for every investor. Hi, my name's Gautam, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and also share this video with your friends and family. Also, if you are new to the options world or are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'll be honored to help you out. With that said, let's jump in and get started. My first pick is none other than Uber. With Tesla launching its robotaxi service recently, Uber does not want to be left behind. So just this past week, Uber and Lucid partnered up on a new robotaxi service taking on Waymo and Tesla. Let's check out this news article on Yahoo Finance, see what it says. Uber's betting big on robotaxis with pure play electric vehicle Lucid as its partner. The two companies, along with autonomous tech firm Nuro, announced on Thursday morning a next generation premium global robotaxi platform exclusively for the Uber platform. The new robotaxi program would outfit the Lucid Gravity SUV with Neuro Driver Level 4 autonomous software deployed on Uber's platform and fleet management systems. Uber said that the goal is to deploy 20,000 or more Lucid EVs equipped with the Neuro Driver over the next 6 years. The Lucid EVs will be owned and operated by Uber or as third-party fleet partners. The service is expected to launch next year in a major US city. A Lucid robotaxi prototype using the Neuro software is already being tested at Neuro's Las Vegas proving grounds. So obviously Uber's stepping up to the robotaxi game and wants to make sure it does not get left behind in the autonomous robotaxi space. Just recently, Uber also partnered with Alphabet's Waymo on deployments in Austin, Texas and Atlanta. So again, there's a lot of excitement in the robotaxi autonomous vehicle space, and it'll be exciting to see how the next few months pan out for Uber. Looking at Uber's fundamentals, we have a very solid 5-year chart going upwards from 2023 to where Uber's trading at the moment at around $90.50. Looking at the 1-year chart, Uber's up nicely, almost 37%. And year to date, Uber's actually up 50%. So all in all, the chart looks pretty solid and the stock is reflecting that. Uber's currently trading at a PE ratio of 1587, fairly decent considering the S&P trades around a 25-26 PE ratio, and it made a 52-week high earlier in July and is just trading about $7 lower than the 52-week high at the moment. It has a nice profit margin of 27%. And looking at its forward PE ratio of 32, that just means that the investors are anticipating further growth and increase in earnings in the time ahead. Looking at earnings per share, it's been beating earnings per share consistently quarter over quarter. And again, if you look at the earnings, they've been increasing steadily. Looking at analyst recommendations, we have about 54 analysts covering the Uber stock. And as you can see, this bar right here, it's mostly pretty green. So out of the 54 analysts, we have about 43 analysts giving Uber a combination of buy and strong buy ratings. Looking at the analyst price targets, Uber's currently trading at the $90.50 mark. And again, the average price target is close to the 52-week high that Uber just made recently. Looking at Uber's 6-month chart right here on Thinkorswim, it's currently trading right underneath the middle of the Bollinger Band. Actually, it's close to this 50-day moving average. And if I were to make an entry in Uber at the moment, I would actually target this gap fill right here. So generally gaps don't have to be filled, but looking at prior instances, it seems like in most cases, gaps do get filled. So looking at where Uber's currently trading at, and we have a gap fill opportunity right here, and this is about the $85 level. It also happens to be right at the bottom of the Bollinger Band, this $85 level. The gap fill coincides with the bottom of the Bollinger Band, which is this $85 strike price. And I would sell puts at this level to make an entry in Uber. My next pick is Affirm Holdings. And if you're an online shopper or do buy online, I doubt that you've never heard of Affirm. But in case you've not, Affirm's business model focuses on the buy now, pay later platform. And it was actually founded in 2012 by one of the PayPal co founders. And as of 2025, Affirm has about 22 million users and generates about 28 billion in payments annually. Next, let's check out this article on Yahoo Finance, which validates all the reasons that I like Affirm as a stock to watch out. So, after years of being dismissed as a money losing buy now, pay later experiment, Affirm just posted its first GAAP profit, grew gross merchandise value 36% year over year, and added 1.8 million new customers in a single quarter. And by the way, this is based on the earnings released earlier this year in Q1. Affirm's focused on scaling its two-sided network across Amazon, Shopify stores, and now even Apple Pay, while moving closer to sustained profitability. At 31 forward earnings and a price to growth ratio of 0.31, Affirm is quietly becoming one of the most overlooked growth stories in fintech. So, talking about Affirm's business model that I went over earlier, Affirm lets users split purchases into installment payments, no late fees, no hidden charges, just simple, transparent credit at the point of sale. It's a payment solution, not a bank. Its revenue comes from two engines: merchant fees and interest on loans that are not 0%. With 21.9 million active users and 8.9 billion in GMV and 350,000 merchants, obviously, just like any other business, Affirm does have competition in Klarna and Afterpay. But in spite of that, Affirm's doing pretty well. In fact, Apple chose to integrate with Affirm directly into Apple Pay, and that is a powerful endorsement to the Affirm brand in comparison to its competitors. Affirm also wins with the transparency and no junk fees, no revolving debt. Additionally, founder Max Levchin, again PayPal co-owner, owns a significant stake in Affirm and hasn't sold a single share since IPO. He's the visionary, and Affirm's culture mirrors his owner-operator mindset. After a turbulent fiscal year 2023, layoffs were made, spending tightened, and the company delivered its first GAAP profit in Q2 fiscal year 2025. Looking at Affirm's fundamentals, it's up 13% year to date. And if you look at the 1 year chart, it's actually up 123%. So looking pretty solid right there. And coming down to the financials, as you can see, it had been struggling in the past, but in Q1 2025, the earnings just came in slightly ahead. So hopefully with future earnings coming out late August, Affirm continues the trend of profitability. And looking at analyst recommendations, we do have some strong buys and buys. So looks pretty good right there. Looking at analyst price targets, it's currently trading right on the analyst average price target. And we have a high of 83. So that would be the first target that I would look out for, given that it's trading around $69 right now. And looking at Affirm's 6-month chart, it's currently trading right in between the top and the middle of the Bollinger Band. So it's around the $69 level. If I were to make an entry into Affirm, the next support levels that I see for Affirm is actually the $64 level right here, which is the bottom of these candles. And this big red candle is close to the $64 level. And if you want to go down even furthermore, I would chase the bottom of this candle, which is also this gap fill right here. And this would be the $62 or $63 level. So again, good entry points would be the $63, $64 level. And that's where I would sell puts. That also coincides with the bottom Bollinger Band right here, 62 or the $63 price level. So that's where I would sell puts to get an entry into a firm. My final pick for this video is actually Webull, that trades with the symbol bull. Now, I've actually used Webull back in the 2020s. And while I don't trade actively using the Webull trading platform, I still absolutely love the Webull mobile platform, because I believe that it probably has one of the best charts that you can use. It's really well made and probably one of the best mobile trading apps that you can find. Webull hasn't experienced the level of success that Robinhood has in the past few years. In fact, Webull had its IPO earlier this year, back in April, and going all the way up to $80. Now, even though the stock since the IPO has trended downwards and has mostly traded sideways for the past few months, Webull did come out with its earnings earlier this year in May, the Q1. So let's look at some of the financial highlights from the Q1 earnings report. Total revenues increased 32% year over year to 117 million. Trading related revenue increased 52% year over year. Total operating expenses decreased 2% year over year to 96.8 million, and adjusted operating expenses increased 2.4% to 88 million. So income before taxes increased 29.3 million year over year from a loss earlier to an income of 19.5 million. So that tells you that Webull is in fact profitable. Adjusted operating profit totaled 28.7 million for the quarter, representing an increase of 26.4 million year over year. Registered users increased 17% year over year to 24.1 million users, and funded accounts increased 4.7 million, representing a 10% year over year growth. So all in all, it seems like this report's pretty positive, and the stock hasn't reflected that. Looking at the Webull 6-month chart, the earnings came in May, and since then the stock has been trading pretty sideways, again close to the $10 level. But if you notice, in just the past few weeks, the stock actually broke the trend right here and started trending upwards, and then broke the top Bollinger Band, and then came down here, and again found support at the middle of the Bollinger Band, and now broke the top of the Bollinger Band and is trending upwards. So you may ask why. And why it's trending upwards is because of two reasons. First, with the passage of the Genius Act, it paved the way for the US crypto industry, which has long sought regulatory clarity. It signifies a significant shift in the US government's approach for digital currencies, potentially leading to mainstream adoption. Additionally, if we look at this article right here, Webull jumped for a third straight week on Friday, adding 17% to close at $16.89 as investors gobbled up shares following plans to reintegrate its crypto trading platform into a group platform. In a statement, Webull Corporation said that the move would support its plans to reintroduce crypto trading to its global customer base following its launch in Brazil last month. Additional markets are also expected to take place, including making cryptocurrency trading available to US customers through the Webull app by the end of third quarter. Now, back in 2020, I actually did use Webull myself to trade crypto, but over the time, what Webull did was actually break down the app between Webull, which is just for stock trading, and they made an additional app, Webull Pay, where they moved all the crypto. So obviously, with the passage of the Crypto Genius Act signed by President Trump and further clarity, Webull is now going back and reintegrating the Webull Pay back into the main Webull platform, just like Robinhood. So that would allow all Webull users to trade the stocks and the crypto in one single platform. So again, going back to the Webull chart, what I would suggest doing with Webull at the present time is to just wait and watch a little bit more. What I would do is wait for its next earnings report, and I would look at the price action of the stock after the earnings report. And once I see the price stabilize after the earnings, I would try to make an entry at Webull at that point. So that's it for this video. I hope you enjoyed the stock recommendations. And if you did, don't forget to hit that like button, subscribe to my channel, and comment down below with your thoughts or questions. If you would like one-on-one coaching directly with me, click on the first link in the description below, and I'd love to help you out.